Scott Sargis, thanks for joining us. It's great to have you here.
Pleasure.
So Scott is the managing director of IEC Partners. It'd be better to have you explain kind of what IEC does, but I can say high level. Part of this episode is to discuss, as companies enter new markets, how can they do so effectively while building their pricing power and protecting it kind of in that whole process. So let's start with, can you tell us a bit, just for the people listening, about what IEC does and the kinds of companies that you work with?
Sure. So thanks for having me participate in this. I usually have tons of fun with these things, and I'm sure I'm going to have similar experience today. IEC was formed about 12 years ago. The genesis of it was at Babson College, which is a very prominent entrepreneurship college outside of Boston, and it's had a global ranking of #1 in entrepreneurship for like the last almost 30 years. So very prominent catalyst for our growth and our formation. We are not academics, even though many of us spent time there. I did not personally, but some of the other founding members did spend time there. But really, we're business people. And one of the things that we've discovered in that process was that there is such unbelievable talent and innovative thinking that exists around the world, that capturing that, encouraging that, developing strategies for how they can grow outside their native markets into markets like the US is of extreme value, both to them, but also to companies in the US and North America. And so providing that platform for helping them meet each other, helping them understand value that each one provides, helping them nurture a relationship with each other is really what IEC has been doing for like the last 12 years. We've been doing this kind of work all over the world, literally from Asia to South America to South Africa and some of the more westernized economies. And we've come across so many just incredibly creative, motivated, inspiring entrepreneurs that it's a real joy to be able to do that and help them out just on a very, very consistent basis. One item that always comes up is around the amount of value that they created and how they translate that into price, because they have a very old school, if you will, or very dated perspective around price and how much price they should command or demand, and how that translates into value. And so invariably, we always have a conversation with them about that. And so that's pretty prominent in our level of discussion, services offer, guidance, things like that.
Interesting. All right, that's great. So I think maybe a good starting place for us is to get into the pricing, how we think about pricing power, which I will hand over to Jeet to kind of walk through, and then we can connect the dots of how this looks for your clients and what you've seen really work in building pricing power, Scott, and go from there.
Sounds good. I will tell you though, before I get into pricing power, Scott, I've known Scott since the late 90s, early 2000s. So this podcast here is a little special to me because I've known him for so long. We worked together at SPG, then we worked together at Monitor. So we've been together for a while now. So talking pricing and value-based pricing. So this is kind of a special moment here. So from a Holden Advisors perspective, a great place to start would be our take on pricing power. So there's definitely different definitions, Scott, of pricing power. The way we're kind of looking at it is we're looking at it in two axes. One is the axis of differentiation. How differentiated is your product relative to your competitors in the market that you're focused on? And the other axis is your go-to-market excellence. So everything you do to take that price to market, it could be your sales, it could be product development, it could be marketing, all of those things, because what we found with our clients is sometimes they're good at one thing and not good at the other. And that's what's preventing them from really optimizing on the price that they could get in the market. So you really have to look at it from both dimensions and not just be very focused on price and that's it, or very focused on marketing and not enough on creating differentiation relative to your competitors. So both of those axes are extremely important to us. We've done a lot of podcasts on pricing and value-based pricing. So that one, we've covered a lot of things on, but the use of price by outside markets as they're coming into new markets is a really interesting one that I know you've got a lot of experience in, not just at IEC, but even prior, your time in the Middle East. And what they were doing over there and how they were taking technology and other services across the world. I'm very curious as to kind of understand and learn from you the best practices that exist that you're seeing and some of the challenges that you're seeing with some of your clients as they're coming into these new markets, especially when they have a differentiated solution in their market. How does that translate into new markets? Because we know that if we price those differentiated products irrationally, trying to enter a new market, it'll be very hard for new customers, once they're anchored on the low price, to get back up to those differentiated pricing. So I would love this conversation for the next few minutes to kind of dive deeper into that aspect of pricing power.
Okay, so Jeet, first of all, this will go on for more than just a few minutes if you let me, because I have strong passion about this, but I'll try to contain myself to some degree, I guess. But boy, you hit a couple of really passion points for me in what you just described. So first of all, for companies that are operating solely in their native markets, so non-US, let's say, typically somebody says, boy, if I'm successful in my native market, then I must have a differentiated offering that then translates into potential success in other markets. And that's a very rational, logical statement to make or belief to have. But what we found is that's not always true, because, and you touched on it in what you just described, what we describe is that there's two main aspects, if you think of a fulcrum. So you have to have a differentiated product that's got positive differentiation. And then you have to have a network for which you can communicate what that value is, what that differentiation is. And in many cases, you need both of those in somewhat equal balance to be able to say, a differentiated product, I'm able to talk to people, customers say yes, they buy, we're successful. In many cases outside the US, the fulcrum is unbalanced to the point where you may not have quite a differentiated product, but your network is so strong within your community that they're buying from you because of your network more so than your differentiated product. It's almost like I bought from you forever, and therefore it's easy for me to buy. And whether or not I can get a better product from somewhere else doesn't really play into the equation. And so if that's the basis for your success, then coming to a non-native market, coming to the US, you don't know it. You don't have a network. You're not going to know people. And the US sufficiently values positively differentiated product more so than your native market. So you've got to have that very differentiated product to be able to do that. Then assuming that you get there, assuming that you have that, assuming that you're able to come here, the reason why buyers buy or don't buy in the US, your product is it's at the forefront or at the early stage. It's less around value. That value is a table stake. You have to have that. It's about risk, and so therefore, then how your price strategy either enhances or reduces that risk for the buyer has to be completely prominent in how you're thinking about your price strategy, because otherwise, why would anybody take that risk on? Now, risk doesn't always get mitigated or addressed only through price. There's other ways to do that in terms of, on-site customer support or other factors. But even things like warranties, guarantees are a form of price, or price discounting or price safety. It enhances pricing power. So you have to have that risk factor come into play into what your pricing strategy is as you enter into this new market. Now, you're not going to get pricing power right off the bat, because you've got to grow into it. You've got to emerge and start to gain traction, gain a positive momentum. And then we can talk about, once you start doing that, how to capture a pricing power platform from there.
Scott, let me can we double click a little bit into I like what you said about risk, and you're talking about purchase risk, right? Purchasing risk, because a customer is about to purchase something from an entity that they're not aware of. that it's not a household name. So there is definitely some trepidations that's there in making that purchase. And the incumbent or the company coming in needs to really be able to mitigate that risk. Is it really that risk? Is that a function of trust, first of all? And if we talk about it in the function of trust, then does that really push the concept of, hey, is there a freemium portion of the product that's out there so you can, get the awareness of the product, use the product for a month, 2 months, 3 months, whatever it is, depending on the product or service? Is that then in a company coming into a new market, is that portion of your offer, does that become more of a necessity that, hey, you have to build that trust? How do you build that trust? And giving that product as a freemium in the beginning or trial for the first 2 months, does that become sort of a necessity in the offering structure?
Yeah. So so I would say absolutely it's about trust. So that's the trust you're trying to get with your prospect, with your customer. For the entrepreneur, for the native, the non-native company coming in, it's all about learning. And so we absolutely believe that having that premium service or premium offer, premium product offered at a deep discount, even if it's complimentary, never free, always complimentary, for some period of time, time bound now, not forever. Not only will you reduce trust or increase trust, reduce risk, but you learn from that. What do they like? What do they want to do? How long do they use it for? What's the level of customer support that they're looking for? Things like that. So having that level of trust, getting that aspect of quick learning is paramount to become successful for the next step. I would say that then once you start getting into that trust mode and learning mode, now you've creating assets that you can build upon for the next layer, for the next phase. So you got customer testimonials, you got learnings that you start to create some brand awareness, brand promotion around some of the things that you're learning. So it's not like you are giving away something. You're actually getting something back that you can then just use in another format for another point of benefit.
Yeah, that's a great point. We had a client that was trying to enter a new market, and what we did was we provided discount structures in order for testimonials and videos. So they would provide testimonial and videos, and we would give them a certain discount for X period of time in order to build that base, right? I'm curious, Scott. One of the things I've noticed with companies entering new markets is, in the new market, it seems like it's kind of weird, but it's like the rule of three. If you can get past the first 3 customers, it's the fourth one becomes a lot easier. It's like the first 3 is like the toughest, but once you get past the third, it just seems like it's so much easier. And then there's another, glass ceiling after that, of course, but the first 3 seems to be the most difficult 3 to get.
So unbelievably true. And there's some debate. Is it 2? Is it 4? It doesn't really matter. It's some small subset.
Yeah.
And to your point about that, because of that, I should say, what we advise our clients is to take, so the first 3, so let's call it 3, the first few customers, they're not customers, they're partners. Actually, they're co-investors. And if you put it into a co-investment framework as opposed to a customer framework, now you change the whole dimension, the whole parameter of your relationship with them. You're much more open about what you're trying to do. You're asking them for feedback. You're not treating them at an arm's length transaction distance perspective. You're really kind of in this together. Help me help you, help me help you type thing. And so framing that in terms of co-investors is very helpful. Now, to that point, it might be that, and we've done this with some of our customers, like that first one, if as long as they can help be your partner for a long period of time, you have access to the tool for free, for nothing, right? That's how valuable this is to get me over the first hurdle. Now, from an economics perspective, like you wouldn't do that because now there's an imbalance of economic value being conveyed.
Yeah.
The point, and you touched on it, which is there is so much value in momentum, so much value in reducing inertia, so much value in quick learning that and if I consider them a co-investor as opposed to a customer, I'm happy to make that trade-off. They're giving me something back. I could trade something, give them something in return.
Yeah, I really like that mindset shift, because you are truly co-creating with your first three, let's say.
Sure.
And if you have that mindset that you're going to co-create, then you're much more flexible in what you're offering, how you're offering, what you're asking for in return, all of those things. You have a different mindset.
Yeah.
Shifting gears just a little bit, one of the things that I know that with some of the clients that I've worked with in this type of environment, I've struggled with is the company's commitment in going into the new market. And it's kind of the what comes first, kind of joke. But it seems like a lot of companies, they want to just dip their toe in, and if they feel like, hey, that's not really working, they're out. So they don't really make that commitment to jump into the pool. And I found that it sounds weird. I know we have to mitigate risks for our clients and things like that, but I found that clients that are willing to jump into the deep end of the pool when they're entering a new market do much better than clients who are like, I'm going to buy half a head. I'm going to put them in Alabama for 20 hours a week, and let's just see what he or she can do. And if he does well, then great. Then we'll hire him full time or whatever it is, and that type of a process usually is a bad signal to the co-creation that you want to do with your first three customers. It's a bad signal for marketing purposes, from like, hey, are you really a valuable solution here? And the efficacy of your company. It just feels like you're not going back to our first point, you're not building that trust if you have half a head in Alabama trying to, size up the market of the US.
Yeah, I laugh because it's, in many cases, the company is saying, I'm not sure this is right for me, when in reality, you should be flipping the script and saying, okay, so what's the perception of the market? What's the perception of the prospective customer? Like, if they don't feel like you're committed, then don't, because it's not whether you're committed or not, it's their perception.
Yeah.
We have this phrase that every US customer, they want to know that on a Friday afternoon, when something goes wrong, that there is a local throat to choke.
Yeah.
So they want to know that there's somebody there that they can say, like, I need help right now. And it's not that it's based in South Africa or based in Indonesia or whatever. Sure, the timeframes can you can manage all that. But again, it's not about what you're doing, it's the perception. So the market's perception is you're not committed. And if you're not committed, then don't commit, because half commitment is like no commitment. It's a choice. It's a strategy. And so our advice is don't commit. Now, can you partner? Sure. Can you get some market intelligence that gives you better insight into that? Absolutely. For instance, trade shows and conferences are a good way to be able to do that in a very succinct manner, to give you a better sense of whether the commitment should be bolstered or not. Should you go all in? No. I mean, there's ways, but to have a physical presence on a commitment type basis and to communicate that you're committed, if you're not doing that, our advice is then don't.
Yeah, that's great. How about alignment from leadership? How important is that, in going into a new market where this is not perceived as a pet project of a division lead, rather it's like a CEO down strategy for the entire company?
Well, it gets even more interesting, Jeet, when you talk about executive misalignment, or you could have executive alignment with investor misalignment.
Yeah,
Right?
yeah,
Because not universally true, but there is a dominant source of interest in executives or companies come to the U.S. with executives because they want to come here. Quality of life, education, healthcare, whatever that might be. And so, many cases the CEO says, I think we should grow in the U.S. because I have a personal interest in doing that. And by the way, there's lots of good business reasons for that as well, but there is a personal dimension to that too. Well, in some cases, you've got investors going, I didn't invest in that. That wasn't the source of me deciding to partner with you. And so, no, we're not on board with that.
Yeah.
I had just had another one, by the way, that was just the opposite of that. So it was a company out of South Africa where the investor said, we did this, we invested in you because you're going to grow into America. That's where the growth that's where the growth curve was. And the
Interesting.
executive team said, I can't do it. And so that scenario fell apart. So it's interesting in terms of, we talk about ecosystem in our world a lot. And that ecosystem is pretty expansive, but it also includes your investors that are pretty opinionated
Yeah.
about what it looks like, why they did it, and how it should be done.
Yeah. You mentioned ecosystem, and then prior to that, you also mentioned partnerships. Can we go into a little bit more of a detail? Because one of the things that we encourage, if you think about pricing power and you're entering a new market or you're getting that go-to-market excellence, we encourage partnerships. We encourage partnerships within their vertical, within their ecosystem, like supplier partnerships, distributor partnerships, whatever it might be, because there's a way that you can partner that brings unique value to that end customer, which you can get paid for. If you
Sure.
structure the partnership correct, you do some co-creation correctly. And that to us is a little bit of a silver bullet in entering new markets. You have an established distributor, let's say in North America, and you want to kind of go in, you can partner with them and have that unique relationship to be able to access that market that they have access to. In your world, how have you seen this kind of work well? How have you seen sort of things that people should be careful about in choosing a strategy like that?
Yeah, so we absolutely encourage partnerships. In fact, we do it ourselves. So we're living the same words that we're advising. So when we're going into different countries, we typically go through partnerships associated with that. And it works for the most part, not always, it never would, but for the most part it works. And we learned a lot from our own experiences, but also with our clients' experiences. So what we found, again, if you have a presence here, it changes things a lot. So not to say it has to be the only way you do that, but it does help from a partnership distributor, call it value-added reseller perspective, if you're talking software, things like that. So we think that that you should not rely on partnerships exclusively, because in some respects, well, way we think about it is that if we can generate interest from an end user customer, and we believe that there is a channel partner that can help address and support that solution better than we could from afar, and we introduce that end user customer over to the channel partner. Now we just bolster the ecosystem. Now everybody's winning, and so and everybody's playing to their strengths. So how would I support something in Saudi Arabia as IEC partners when there's already people that are there that have already built that infrastructure out that can do a much better job. So you're really economizing assets already been created. Now, one thing I will say is that when you deal with partnerships, let's say software and you get into a distributor that's just saying, okay, so we made it onto the distributor's shelf, we're on their line card, we're done, never works.
Yeah.
It just sits on the shelf, right? So there's got to be this relationship you build. In some cases, it takes financial resources to help do that, to help make that more successful. Otherwise, it just sits on the shelf collecting dust. The other thing I will say is that ecosystem doesn't necessarily translate just into the channel partners associated with that. So just as an example, we have a company we're working with that has a combination hardware software solution. And so they have traditionally been pricing their services based on what we call a CapEx model, capital expense model. And so what they're doing is that there has to be an investment made by the end user customer to buy the hardware, to have it installed so the software can support it. And it's not a light price tag. It's fairly substantial. And they were running into headwinds with that model. And we sort of gave them an early stage heads up. Not that we're clairvoyant about this stuff, but we know enough to say that's going to be hard to do, going back to the risk issue. So one of the things that we did is that we partnered them ecosystem style with a financing company and changed that CapEx model into an OpEx model and made it a subscription-based business, even though there's hardware as part of that needs to be purchased beforehand. So now they've got a 5-year relationship with the client, all on OpEx. It mitigates risk a lot, especially from a cash flow standpoint. And they were able to actually charge more. They're going to get more fees after 5 years than if they did a shorter time frame under the CapEx model. So changing that pricing dimension, but using your ecosystem, bank financing or third-party financing as a way to do that, turned out to be a win-win for them.
Yeah, I love that because that fundamentally changes the valuation of the company also, right?
Completely. And by the way, now the bank has an incentive and they're doing it, which is introduce them to some of their customers.
Yeah.
So
Sure.
I didn't anticipate that one, but that was like, okay, yeah, that's cool.
I wanted to kind of get into some of the product portfolio conversation, but Tracy, did you have any, you're kind of listening in on the banter that we were having back and forth. Anything questions you have or thoughts?
Yeah, there's a couple of things. I mean, one thing is, as I was thinking about examples, and Canva came to mind just in terms of their success in doing this. They were in Australia and came to the US, obviously been growing like crazy. One of the things that they did along the way was work with universities and tons of different partnerships. So I guess there's two different things on my mind just as you're sharing. One is, how do you know when you're ready to go into partnerships? Like, you've got kind of the first little bit of momentum, and then when do you advise companies to kind of take that leap? And then the other is, I'm just curious, like other examples of ways of building credibility that you've seen be successful.
So on the first question, which is a great question, how do you know you're ready, right?
Yeah.
So what we evaluate is, are you working in the channel partner or the partner system in your own native market? Because there's a lot there that you can learn from that. If you haven't, then there's a lot to be learned. If you're already successful, then let's figure out why that works, and let's talk to those channel partners and see what they value from you. So that's one piece. The corollary to that is, can we connect through their channel partners into people that they know in their non-native market, say the US? Because usually and if they don't know anybody, that's okay, but we can make we can look for people that are like them and introduce them together, and you start to get channel partner conversations going on. Always interesting, but it's for the benefit of the client, and now the client can get pushed through that system to go into the new market. So it's actually a great way to so we have this notion that we call soft sales. It's really market research, but it's market research where we're talking with end user customers or prospective channel partners about what the client is offering. It's not a sales asking for feedback. Give me some insight. Give me some perspective. What do you think? And invariably, we'll get a ton of learning from that. But it also, if there's also a there, the end user channel partner will say, well, wait a minute, I know you're not ready yet, but tell me when you are. Keep me informed. And so that's sort of a kind of we call a soft sales perspective around that. So I would say, where are you in your native market from a channel partner perspective? And if you're just starting there, do that first. But if you're already there, then let's see how we can use the channel partner platform, channel partner market, to say whether or not you can be ready here in the US. So that was your first question, Tracy. I don't remember your second question.
First question. Second question is other ways to build credibility. Like when you're coming into a new market, and partnerships is one. Obviously, the proof of the product itself with freemium models and things like that is another thing. What are things that you've seen work with some of your clients?
So, the best way to build credibility, frankly, is at the early stages. Now, I'm not talking mass market. If we're talking mass market product, a little bit different. I mean, so Canva is a mass market product. I mean, but they still had to go through at least some of this process to be able to get there. But that takes a lot of advertising dollars, brand promotion dollars, things like that. That's got its own universe, if you will, associated with that. The best way to, so what we know, and it's been proven, the best way to build credibility, the best way to build insight or awareness is referrals, at least in the very beginning. So the more that you can have a client that likes what you're doing, supports you, and is willing to be a sounding board mouthpiece, always, always, always the best way. There's research that's shown that something like 80% of decision makers make their decisions based on referrals from people that they trust. Now, that's not like people that they trust just because they know, like, from Mr. Wonderful Kevin O'Leary type thing. It is from people that they have worked with before, that they know from prior experience, that they just know core values and things like that. So to the degree that we can start to establish that, then you build it effectively in the very, very beginning, kind of one node at a time. And all of a sudden that node starts to take off. Then you can build onto things like mass market, outbound digital marketing and some of those things. But getting that credibility from the very beginning on a one-to-one node to node basis for the first several months is critical. Again, going back to my earlier statement, you learn a ton from that. And the learning is it's invaluable.
Yeah. Tracy, one of the things you mentioned was Canva, right? And it occurred to me that we were talking about channels in sort of a ubiquitous manner, but you did hit on something which is really important to point out, which is that the university, the government education market itself, it's inherent in discounts, right? So you'll have an MSRP that's for the world, and then you'll have a discounted price sheet typically for government education. So there's already sort of this thing that's in there, and education is a great channel to enter a market because they're always looking for free things to use, and there's R&D facilities, there's all this stuff. They're always like interested in a deal because they don't have that much budget. And it's a great way to protect your price, not give it to the mass market, and slowly get people to use it and get hooked on it and build that referral sheet, build that credibility. And then you can go on out into the mass market a lot easier with all of those quotes, the anecdotes, the case studies, and everything that says, hey, I've got credibility now with the product. It's also a great channel to utilize to build your customer support system onshore and things like that, where you start off small, you start off on these little incubations basically, and you build your infrastructure, and then when you're ready, you can do that big release. So that was actually a great example that you brought in there.
One other thing I was going to add to that is that invariably the education market has nameplate recognition, not universal. So Harvard's going to be different than Rollins College, for instance, right? But people will recognize Rollins College. And so you have that nameplate recognition where you don't get that into mid-market companies necessarily.
Yeah, that's a great point.
The thing about the audience too is like I personally am kind of in between the two audiences where you have like more of the like old school way of hiring a designer and using all of the tools to graphic design with Adobe and everything, and then Canva, you do way less time, less resources, it's way cheaper. And so as they are going after these younger people that are then going into the business world and taking Canva with them, they've already used it themselves. It's like cuts through tons of time and resource to be able to find new users and everything.
I know we're probably coming up at time, but one of the things that I did want to chat about, Scott, is it seems like when we're advising clients to enter new markets, there's sort of a component of the type of product or service they're coming in with, and the way I say it is, it's always a little easier when you know that product or that service is serving a need for a very specified group of customer base. When you have that and you can clearly articulate that need, it's a lot easier than if it's a nice to have. If there's already an incumbent product that's good enough, even though this is a differentiated product, and this solution is sort of a nice to have solution rather than a need to have solution, those things take time, it takes energy, there's marketing, there's more sort of to do to bring that product service into the mass market of North America or anywhere else, a new market, than the first one. And I wanted to get kind of your thoughts on that piece relative to the product portfolio.
Yeah, no, I think that's exactly right, Jeet. We've seen that multiple times. And things that we have discovered in a very interesting way is that so everybody sells, not everybody, many people want to sell on Amazon, right? And so they think of Amazon as a marketplace, which it is. The other thing that Amazon really is good at is doing market research, which is exactly to your point. So is this market now, so, or is this product, sorry, is this product so valuable in my niche that now I can see that there's a way for me to expand upon it, or maybe change it, change the pricing, whatever
Yeah.
that might be. So, and there's a whole science around how to optimize your presence on Amazon, et cetera, et cetera, et cetera. But my point about that is you don't know if what that niche is, or whether you're serving that niche until you really get out in the market. And Amazon is a great way to be able to evaluate whether that niche is being underserved, overserved, or rightly served by what you're doing. And you're going to get tons of research. You'll get competitive analysis. You get user feedback. You'll get pricing insight. And so don't go in terms of saying I'm going to make money on it. You're actually going to get learning from it. If you make money, it's a bonus. But
Yeah.
it's a great platform to be able to address and quickly exactly that issue, or that dimension that you were just describing.
Yeah, that's great. Tracy?
Hey, I just, the more you talk, Scott, the more it feels like everything ties back to growing the company's ecosystem, making it stronger, having that be kind of very central to the pricing power building and growing, and I don't know, it all fits together. So thank you for walking us through that. I appreciate it.
It was my pleasure, and I look forward to doing this again. And if we're true to form, Jeet and I will do this together, with a beer or bourbon in front of us. So
I love it. That's a
Yeah.
definite yes.
There you go. All right. Well, thank you, Scott. I really appreciate it. Thank
Yeah.
you, Jeet.
Thanks,
Till
Scott.
next time.
all right, thanks.